This conference will now be recorded.
All right, good afternoon, everybody. This is Greg Morton. It is Sunday, April 2nd, 2023. This is the weekend video update for Canslim Growth Stock Investors from the Greenville Eastside IBD Meetup Group, as well as the Stockyard Meetup Group. As always, this is for educational purposes only, not recommending stocks or securities to buy or sell, and all investing has substantial risk of big losses. So we want to learn first and only then invest. So today we'll look at the M factor like we always do, current market review, and just what a difference a week can make. Hopefully in the week ahead, the market won't say to us, April Fools. Hope it's not one of those. We'll talk about current action plan thoughts over 3 different time frames. We'll do some chart review, and we'll talk about the next monthly meeting, which is Wednesday, April 12th, 2023. I have a lot of good stuff on the agenda, and I'll sort of highlight that when we get to the end of this video today. So we'll start with the M factor. While this letter is at the end of Canslim, it is the most important letter in Canslim. O'Neill teaches us that being in step with the trend is actually 50% of being successful in this battle, and it is a battle. So if the trend is against us, we need to be fine with being out. And if the trend is for us, then we need to be scaling in further. So we always want to diagnose or interpret. We don't ever want to predict. We look at 3 things, and these are sort of stacked in order of priority. The action of leading stocks, and I'm talking about strong Canslim stocks, fundamental and technically sound stocks, not meme stocks. So that list is growing, and even if you missed them, we still study the leaders because we get clues on the M from watching them, as they should be holding up when the M is healthy. Actions of stocks owned, so the exposure increased this week in the group teaching portfolio because we had a follow-through day, and the rule is that when we have a valid follow-through day per the system, exposure has to be increased, even if that's using an index fund, if you don't have something properly set up and breaking out or presenting an early alternate entry on that follow-through day. And then we look at the market pulse, distribution day count, price and volume on the indexes. I wrap those up in my market tracking tool, which is the coloring book, and I actually have some number 1 and 2 that are built into the coloring book also. So bottom line, it has been a tough market recently, and really a long bear market. Things really sort of turned down in February 2021, and certainly we had a peak in November 2021. So that's either 2 years or 16 months. Either way you happen to look at that, it is above average and is a long time. And we can sort of see the whipsaw action recently just looking at the cover slides for my weekend videos. 2 months ago, it looked like maybe we were starting a new bull market, and then it looked good. It was game time. Then sort of go, but got to proceed carefully, seeing some warning signs, and then it was like back to just danger zone. And then question marks 3 weeks ago, then a train wreck 2 weeks ago. That's when all the banking contagion started, I'm sure. And then 2 weeks ago, we sort of had, yeah, they don't have their days right in YouTube. Anyway, we had the upcoming Fed meeting with Mr. Jerome Pickle. And then last weekend, I still thought it was sort of a Mario Kart banana peel. A lot of things just getting thrown in front of us in the ways of headlines and volatility and poor market reaction to those things. But this week, we got follow-through days on all 3 indexes. Who knew? So we had the NASDAQ and the S&P 500 on Wednesday, and we had the Dow on Friday. It wasn't strong on the Dow, but I still look at that because once in a while IBD will look at that. And then, very importantly, the NASDAQ and the S&P 500 both had subsequent follow-through days on Friday. So that is an encouraging signal. Mike Webster and Justin Nielsen have shared with us that their research showed that any strong uptrend that worked well, made progress, produced profits, was one that had subsequent follow-through days in the 25-day window from the rally day. I actually will study them 25 days from the follow-through day. But either way, you want them to be fairly soon, whichever system you happen to use. So let's look at what we saw this week: index charts, coloring book, group teaching portfolio. So let's get out of here, jump over to Market Smith. So here's the NASDAQ. Let's go to the daily chart. So currently you can sort of see, oops, we reset that to today. I was looking at something else. So here we are. So here was the follow through day this week, and then here was the subsequent follow through day on Friday, pushed us back above 12,000. This is the strongest looking index, and right now you can see that we have all four moving average lines are stacked in the correct order and looking good, and we see the strong volume on the subsequent follow-through day, at least, even though it was below average, and that still counts for the follow-through day. It only has to be up from the prior day, but it is nice if it can be below average. So at least we saw that, above average, at least we saw that on Friday. So this is certainly the strongest looking index right now. S&P 500 back above all four moving average lines, but notice they're not stacked in the correct order yet. So we need the 10 and 21 to come back above the 50. The NYSE still below the 50, so not as good, but still making some progress. And then the Dow did get back above the 50, but still need to get those moving average lines up. And the Russell and the S&P 600, which are both small cap indexes and have more exposure to financials, are the worst, under the 200, under the 50, moving average lines, all out of whack. Same thing on the S&P 600, out of whack, below the 200 and below the 50, but still showing some improvement, but definitely struggling. And if we jump over to the coloring book, you can see just the green sort of creeping in. Started with the NASDAQ flipping to green on the MMTS and the window of opportunity opening. And then, of course, the S&P 500 went to yellow, then to green. Here are our follow-through days down here. This was a day 13 follow-through day on the NASDAQ, and I think it was may have been a little bit sooner. I'll have to count the days on the S&P 500. Here's our subsequent follow-through days, and then the first follow-through day on the Dow. So this was the 9th follow-through day since we've been in this bear market. So that just shows how long we've been struggling, and the 8th on the S&P 500. I do still have only 7 buying days and 11 selling days in the 25-day window, so that's still a negative, but again, none of these are litmus tests. We look at them together. And then IBD, of course, flipped to green when we had the follow-through day. And then we've had a trend of new highs on the NYSE, and we actually did have new highs on Friday on the NASDAQ, so outnumbering new lows. So we'll see if we can get a trend. We've had 2 breakouts to start tracking since the follow-through day, work day on the follow-through day, and then PagerDuty broke out on Friday. So these, I only put valid Canslim stocks in here. This one, the sales were a little bit light. So I did note that it was only 20% instead of the 25% minimum we like to see. But stage 1 flat base up 5% on 50% increase in volume. So we can keep an eye on those and see how they do. But again, we are seeing improvement, and we hope it's just not one of those where next week is April Fool's and we're just getting slammed back down with a bunch of distribution creeping in and that sort of thing. So we'll study that and see what happens. If we look at the group teaching portfolio, overall, so we're 42% invested, down 2%, 2.1% for the year. Most our positions have gains now, except for one of the put positions in Fryer, but we've taken some position in some profits in some of those shorts, and we've been discussing that at each of our meetings, just sort of tracking the thesis on that one, and we'll see how that one unfolds. But it would be nice to see if we get an uptrend to get some progress to perhaps flip to profitable for the year. So we will see what happens there. So let's go back over here. Okay, we covered that, covered the group teaching portfolio. So just a couple other signs of strength. So I just clipped because it would fit the size, the top 9 in the IBD 50. And it was just interesting to note that we have 5 that are extended. So that's showing their strength in the market. That's not a bad thing. That's a good thing. Even though we can't buy them when they're extended, we're not supposed to buy them. It's still, you got 5 that are making progress and are extended. And then you have 4 that are set up and may be actionable soon or actionable now. So I thought that's just very constructive and something to note. I kind of highlighted number 9. How often do you see that? Highly profitable biotech in major growth mode. Don't forget to read these little chart snips over here on the left, because they supplement and complement everything you have on the mini chart. And like, look at the first one, mentions AI. So there, right away, hot area. When to study. Let's see what the stock looks like. Let's see what the story is as we dig into that. And then another sign of strength I noticed this weekend in the top 40 industry group, 17 of the 40, almost half, are traditional growth stock groups. And from semiconductors to hardware to telecom. I put shoes in there because of Crocs, and even Deckers, as well as OwnCloud Running, are sort of on everybody's radar now. And apparel is up there in the top industry groups, even though it's not traditional growth. Software, medical. So this is just good retail internet, because we've seen some weakness. You can remember some weekends we only had 1 or 2 or 3, and here, I had mentioned before, I like to see at least 25% of them, or 10 of 40 traditional growth, and we see a lot more than that now. Still have all this bank contagion going on, but maybe there's enough certainty that the market can price it in. It doesn't mean it's over. It doesn't mean it's not bad, but maybe there's enough certainty about it that the market's pricing it in. If we get whacked again and there's a bunch more bad news, then we'll know it wasn't priced in yet. So current market sign for me, because we had the follow through day, is go, but proceed with caution. So short term, despite those walls of worry, despite Russia, despite China, all the saber rattling, we have a follow through day, and we have Canslim stock setting up and are breaking out. So that's exactly what we want. We have both elements. But the key is to wade, not to plunge. Scott O'Neill said plungers die. So we want to remember that, be careful, and each person just has to decide what percentage of exposure is right for you right now. If you started early and you own ALGM and ANET, you might be 100% invested already. But if you had waited till the follow through day and you're just getting started, then again, you got to decide, where you are and what you're going to do. So over the intermediate time frame, because we have the follow through days, it's really the same as the short term until proven otherwise. Again, as long as the market doesn't go April Fools, start throwing us distributions, growth stocks breaking down, we're good. In the long term, at some point, it's still going to be party like it's 1999. Super excited. The Prince mode, as I call it, is coming. We've had a bad, deep, long bear market, and so we're going to have a strong bull market down the road. I just don't know when, and I won't know till after it's here and we're in it. But there's just no way to know. But we've had a nasty bull market, and so something good follows those at some point in time. So action plan is just wading back in. It's increasing exposure as the initial decisions are working. That means making progress, making some profit on paper at least, and other valid Canslim opportunities present themselves, which can be breakouts or early alternative entries. The shakeout +3 in the double bottom, a sloping trend line, something like that, but not extended. So what should you be doing now? Can be investing some, not just sitting on your hands, but the educational things I've recommended stay valid. Join an IBD meetup group, go to those monthly or bi-weekly meetings. You've got mine at the Stockyard. Alex Marinko runs one. Roy Maddox in Charlotte runs one. And John runs one in Boston. And there's probably some other good ones. I don't mean to leave anybody out, but I know these are some of the big ones that have online meetings and put out quality material. read or reread your books. O'Neill's How to Make Money in Stocks. I literally learn something new every time I read that book. Livermore's Reminiscences is a great book. In fact, if you have Spotify, I think they have that on there on tape now, so you can listen to it in the car. Oh, well, I know it's not tape, it's digital, but you get it. I'm old. Darvis, How to Make $2 Million in the Stock Market, is a classic. I really like The Perfect Speculator. I highly recommend it. And I certainly highly like the Life Cycle Trade book. I think that's one of the best new investing books to come out in the last few years. So go deeper, take a graduate class, instead of spending your tuition on losses, spend it on some education. The Trader Line IPO class was just top notch. I know John just did one on buyable gap ups. Matt Caruso's course and some of the other U.S. investing champions or top performers have courses also. And so you just read about those guys, read the reviews, find what treats what matches your trading personality and your learning personality. Matt's course was a good fit for me because he's worked professionally on a trading desk. He also has taught in higher education level. So I think he's a very good educator, teacher, presenter, and has a practical experience, which is a rare combination. And then you can sign up. They have them that meet online. Ropel has one, Minervini, Matt has one, which is the one I attend. So just find what works for you. It's always baby steps. It's never big steps. One of my favorite movies there with Bill Murray. And then remember, always, always, always do the weekend routine. I know I was listening to another Ropel interview recently, and he said since he got into the business, he probably missed doing his 5 or 6 hours of chart work on Sundays 4 times over many, many years. So it's just very important. I try to do most of mine on Saturdays, a little bit wrap up work on Sundays sometimes. Currently, we have good setups and we have the M giving us a tailwind. It's exactly what we've been talking about and wanting to see this weekend after going through the Growth 250 list, all the lists in the newspaper. You have about 28 names on my first pass watch list. So that picked up a little bit from last weekend. And let's just review some charts. We'll hop back to Market Smith. Let's look at our leaders list. And so see how these look. So here's ALGM, just a beast, screaming RS line. If you got in here, congratulations. Great. Had a chance to add on the pullback to the 10-week. You had to have an order in because it barely touched it. Probably didn't even get close to the 50-day. So that's why I use a pullback to the 10-week, even though I'm not in that one. Could have had an add-on buy and triggered the 8-week hold exception. Looks like a strong Canslim stock, so it probably met those 11 criteria that I covered in that video on the 8-week rule. Has ownership, just looks great. ANET looks strong. RS line pausing a little bit. Nothing wrong with that. Hit the 20% profit goal, so some people may have taken all or partial profits there. Nothing wrong with that. ACLS, 3 touches back of the 10-week, looking strong. RS line still heading up. AEHR, so this one got hit hard this week, slammed below the 50-day on volume. That's a sell signal in a lot of people's rule sets, including mine. So if you were in that one, you would have had to make a decision and see what your rules said. It had gapped up like 20% the prior 3 earnings reports. So we'll talk about that a little more at our educational meeting and what Scott St. Clair said about that on IBD Live. ON, we kind of touched on already. I think this may be a very rare pattern called a short stroke. It's just a 2-week pattern. Maybe a setting up for that. Has some flaws, but it also has a lot of strengths. LSCC, several weeks up in a row, consolidating, hit the 20% profit goal, so maybe partial profits were taken. NVIDIA, this is a very large cap, 686 million, trades $14 billion per day. So obviously the big boys can play in it. Not one of my top picks, but it's in AI, doing well. Just look at all those weeks up in a row. So maybe I should be in it. RS line looking great. SMCI, RS line heading up. Again, pull back a little bit. So those were just some to watch. And if I look at my watch list from last weekend and just comment on these, Fortinet, kind of early entry at a horizontal trend line there. David Ryan talks about that. RS line's got a blue dot, hitting a new high. That's strong. Dexcom, it's 18% deep. That looks like a flat base to me. It's just a little bit too deep for pattern rec. Very tight trading right there, convergence of the moving average line. So one to study, can this RS line push to new highs with price if it goes up? MPWR set up in that cup with handle. That's a deep cup, 44%. Maybe this will become its own little base. Palo Alto looking good. Again, horizontal trend line looks actionable to me right there. Axon setting up a new little base, kind of could have an add-on buy if it hits a new high after a gentle pullback. Depends on your add-on buy rules. ON, we already talked about. A couple IPOs, Mobileye setting up in a base there. NXT, this one's been wild and woolly. Hard to trade. One I got stopped out of and didn't get back in. So those are some to look at. Let's go back to, lost it. There we go. So we looked at those reminders. EPS season is cranking up. So here we go again. Longest one of the year. Started January 1st, goes all the way to May 15th. So this is a new earnings season that will start April 1st and run for 45 days. It really kicks off about April 10th. Got to be prepared. Two of those, well, one of the stars, ALGM, started with a gap on earnings, if I remember correctly, and then ON had a great earnings reaction. So EPS can be a catalyst for the market either way, up or down. So we just have to watch that. Monthly meetings. Our next meeting is Wednesday, April 12th. So these are geared toward education. You can register at the Stockyard Meetup site. Tuition is $12, includes live attendance, recordings, slide deck, links to the webinars, etc. And if you sign up for your first meeting, not having signed up before, I send you a courtesy copy of everything from the prior month, recording, slide deck, that sort of thing. So our agenda for April, I pretty much have picked the big items. First of all, it's going to be chock full of Canslim nuggets or Canslim munchkins. These are sort of sweet treats, as I'm maybe going to call them now, see if I like that. Ropel and Charles Harris were both on IBD Live, so there's a ton of just great wisdom that comes out of those. We'll have a lot from those, as well as more that has come up over the last month. So I have some good stuff that I think you guys will really like. And the educational topic, the big educational topic, will be welcome to the world of the rare gems and patterns. We're going to look at the high tight flag pattern as well as its nephew, which is the ultra rare short stroke pattern. So we'll kind of walk through the parameters on those and look at some classic historic examples, see what we can learn from those. So prior meetings, these are available to order. If you don't have a set of written sell rules, I just think this is the biggest step really that you can take on your trading journey as you get serious. This is knowing your second trade before you make the first trade is what it is, and it's being prepared. And it's, people never think about that. They, when they're starting out, wait, what do you mean know your second trade before you take your first? Know where you're selling on the upside and the downside. And so I spent it took me 3 whole months to cover that. So those are extensive. You can order those. I've gotten all good feedback. Nobody has complained about them or I think they've helped. So I highly recommend those. And if you're struggling with the weekend routine, I spent 2 months, really 1 month full, and then I touched on it again the next month. So you can order those. If you're interested in that, just send me an email, say you're interested in ordering, and I'll send you the list with the ordering instructions. The prior meetings are $15 each. And again, if you think they're worthless, let me know. I'll send your money back. It's no big deal. But I don't think they're going to be worthless. I think they're going to be helpful. So join the meetup sites, free, no membership fee. Follow me on Twitter. I do put some good stuff out there as well as try to have sort of a humorous good time and laugh a little bit at other times. But it's very clear when I'm engaging in each, quite frankly. hope. And then my YouTube page, your own. So like and subscribe. There's other videos on there I recommend. Teaches you how to use a group teaching portfolio, just a lot of different stuff. There's one on there on the 8-week hold quote rule. It's really an exception to the rule. I think that's confusing to a lot of people. It was to me, and I finally dug into it real deep, and I think I understand it now. And so I did a 30 or 40-minute teaching video on that you can access. So I think that's it. I hope you have a great weekend routine. Hope the market doesn't April Fools us. So I hope you have a great week also. And that's it. I'm out of here.